I incurred. Okay, this for my rent, this is the cost that I'm setting aside every month for my rent or my salaries. This is the money I paid to my clients, to my staff rather, than to tax. So that's the classifying aspect in accounting. So you are not just, it's a process of recording and classifying. Classifying those things you've recorded into different classes: income, expenses, cost of sales, rent, admin, salaries, tax. You are basically classifying them under them. Then you now make a summary. So this summary is basically, okay, at the end of the month or at the end of the week, whichever that fits you, that fits your business, the schedule of your business, you're now summarizing them. Okay, this week I made a total of these sales. I made a total of these expenses. Oh, this month I paid the total sum of 200,000 naira as salary. Oh, I paid this tax. Oh, I paid this fine. They're not making a summary either in a week, either monthly or yearly, whichever fits your business. That is the summarizing part of the definition of accounting. Then finally, interpreting. So when you've recorded your sales, you've classified them. Okay, this is income, or this is expenses, or this is rent, or this is salary, and this is your tax. Now you've made your summary. Okay, maybe every week you do your summary, you check your book. If somebody is doing it for you, you are checking with the person. Oh, let me see what you made weekly, what we made weekly. Let me see the expenses that we made weekly. Oh, now let's come to interpreting. When you meet the person, can I see what we made this week? Oh, let me see the expenses we made. For example, the staff, maybe you have staff and they bought water. Maybe they use bottled water or dispenser water, and they bought like 20 in a week, and you can see that it was recorded 20. Then you can now make a decision that, why is this cost high? What did you people buy? Oh man, we bought bottled water, we bought dispenser water, a lot. We were in dry season, this one, that one. 20 bottles. Are you people, which animal drink? Giraffes, or like 20 bottled water? You cannot make a decision that, oh no, this is a lot. Maybe you can advise that they bring water from home, or just stick to one bottle water per day, 5 dispenser water per week, or if it's 7 days, you people work 7 times per week. You make that decision. That's decision making, because you look at the record, you look at everything, and you're not making a decision. Oh, okay, you want to cut down costs. That's cutting down costs. That's the example I gave. Or you want to plan a growth. Okay, so we have this amount of money. We've made these sales. Okay, what can we do? What exactly can we expand into? So that's where the interpretation comes in. So basically, some of us are already doing all these things and we don't even know. And we keep still saying that, oh, accounting, I beg, I can't do this. Oh, I don't understand. But well, these are the things that we do on a daily basis. But it's just that we're not doing it with intention. We're just like maybe a mental calculation or a mental activity. So basically, when you classify what you recorded, when you now make a summary, whether weekly, monthly, or yearly, and you now make a decision of it, that is what accounting is all about. Do you understand? So okay, so it's like if you don't have this record, you don't have control over your business. Or maybe you give it to somebody and you're not always checking with the person, you don't have control over your business. So yes, this is very, very important. So that's basically what accounting is about. So now we'll talk about, so the topic is accounting and bookkeeping. So there are two different things. So we need to know the difference. So for bookkeeping, for example, when you are recording every day your transactions, every day you are recording them, you are writing down, okay, the sales you made, the purchases you made, the salaries you paid, daily, day-to-day recording. Then you are entering sales, you have a book, a register, a book, hardcover, softcover, jotter, that you are writing them down. And maybe from time to time, right, you check your bank statement. Oh, this is my bank statement. And you're checking into the things that have left your shop, that have left your store. You're checking in, that's basically you're reconciling your bank statements with, okay, the money you have at hand, or the sales you've made, or the inventory you have we're doing a reconciliation. Or you are filing an organizing document. For example, when you buy something, they give you a receipt, you keep it in a file or an envelope. Those basic things, that is bookkeeping. And this can be done by you. It can be done by you. That is bookkeeping. You are checking, you are recording your transactions, your sales, your purchases, your payment. You are keeping receipts. You have a book. You have a register. You are using your phone or whatever it is, biro and paper. You are looking at your bank statement from time to time. You're looking at what is going on, how money is coming in, how it's going out. You're looking at the narrations. That is basically bookkeeping. bookkeeping. Now, accounting is like a step further. You are now using this record that you have kept. You're now analyzing and interpreting them. You are preparing financial statements with them. You are computing tax. Oh, okay, VAT is this rate. Okay, you sold this. Maybe your goods is a goods that's being charged VAT. Okay, you sold this. Now you need to remove the VAT so that you can remit it to government. That is accounting. You're now thinking of what strategy you can make. Okay, is it to cut down costs, or is it to increase revenue, or increase adverts? Whatever it is you making doing strategy. Then maybe if you want to just do audits, maybe for any reason. Like I can remember a time, I think last year, we were required. I work with Madam Temidayo as well. I used to work with her. We were required to present an audited financial statement. We had to reach out to an auditor, to an external auditor, because I am an internal auditor, yes. So we had to reach out to an external auditor who would help us to do that. So that is accounting. And this is typically done by a qualified accountant, a chartered accountant, an experienced accountant. That are the ones that can do this. You can't do, as a business person, especially if you don't have the expertise, you cannot prepare your financial statement. We have the 3 financial statements. We are going to get there. You might not be able, you might know the rate of tax to be charged. You might have some ideas, but you might not be able to do the whole computation that you need to file, right? So that is the difference between accounting versus bookkeeping. So we need to know some terms as a business owner. We need to know some key bookkeeping terms to help us in our business. When you hear revenue, someone is telling you revenue, it's not a big deal. It's basically the money that you earned from selling a product or rendering a services. That is what it means. What you earn from selling something or rendering a services. For example, you are into bags and you sell 50 bags and one bag is 10K. Then that means your revenue is 500,000 naira. That is your revenue. 500,000 naira. Then we have another term that we need to understand, and that is gross profit. Gross profit is when that revenue that you have made, that 500K, when you remove from that 500K the costs that you incurred to produce those bags that earned you that 500K. So maybe you bought leather, you bought zip, you bought button. Those are your cost of goods sold. Even the person that produced the bag, yes, paying that person that produced, that's your cost of goods sold. Anything that helps in the production of that bag that you are selling, that is the cost of goods sold. That is the cost of goods sold. So when you minus that cost from the revenue you have made, then what you have left is your gross profit. Then after your gross profit, there's another term that you need to know, net profit. So maybe you're applying for grant, I tell you, okay, bring your gross profit, bring your net profit. And I'm not discouraging you from getting an accountant or something. You can on your own, with this knowledge, do the calculation by yourself. Then net profits now is when that gross profit, that, as I said, gross profit is when you remove the cost of goods, so the cost that you incurred in generating your revenue. When you remove the cost from the revenue, you now have your gross profits. Now for your net profit, sorry, I got started by my sister. Now, for your net profit, when you remove your operating expenses from your net profit, that is, for example, maybe delivery charges. You had to deliver it, and you remove it. You went to the market to pick up the raw materials, utility, maybe NEPA bill, the salary you paid those people that were working, maybe your admin, your accountant, all those admin expenses. When you remove it from your net profit, when you move from your gross profit, you now have your net profit. Another term that we need to know as business people is liabilities. Everything your business owes, OWE, anything that your business owes, maybe a loan that you take from a friend or from a bank, maybe you bought a raw material on credit, you have tax that you have not paid, those are your liabilities. You are owing people. So when you are owing people, when the business is owing people, that is called liabilities. And as I already explained, what cost of goods sold? Cost of goods sold is basically the direct cost of producing or buying the goods you sold. Like for me, I don't produce it, I buy it. So that's cost that I pay Madam Temidayo to get the bedsheets for me to resell. That's my cost of goods sold. Then when I minus it from what I got from the customer, then I have my gross profit. Now, operating expenses is basically the everyday cost of running your business. As I said, rent, salaries, utility, advertising, transportation, that is your operating expenses. So now assets, everything your business own, OWN, everything your business own, your machine, the goods that you have. Yes, though you are going to sell it off to customers, but it's still your asset. It's still your own. If you take the financial equivalent, that money is still your money. The land, the equipment, and as a business, you probably have sold to people on credit. You sold on credit, right? That's money and they have not paid you back. That money that you're yet to pay, that money is an asset. If you have cash as a business, is an asset. That is asset. Everything that your business owns to you, that is an asset. Then we have equity and capital. Equity or capital is basically your own personal contribution to your business. Or maybe a friend say, okay, I want to invest in your business. That money is equity. It's a personal contribution to that business. That is what that business is worth to you. Maybe, for example, a business wants to wind down. That's liquidated. That's a business wants to close, for example, and you've paid all the people you are owing, you've paid them, and all the goods you have, you sold them, and your assets. So those things that are remaining, your assets, maybe the assets, you even sold the asset. That what is now left is your own contribution to the business. So that is equity. So there's a golden accounting equation, and it's the foundation of every bookkeeping. So it basically means that your liabilities, that is what you are owing, OWING, what you are owing outsiders, plus what you contributed to your business should equal your assets. What you are owing people, what the business is owing people, plus your equity, that means your own contribution, should equal your assets. So your asset, as I mentioned in the previous slide, is the equipment you have, the inventories, that's the stocks you have, the cash you have as a business, that is your asset. All those things, if you total them, it should be equal to what you are owing outsiders and what you have contributed to the business. It has to match. If it doesn't balance, if it's not equal, then there's something wrong. So there's an example here. Great fashion store has cash of 200K, and I have a goods of 300K, and I have a machine of 150. That means my asset is 650,000. Then I have a bank loan of 250,000. There's a supplier that supplies things to me. I'm owing the person 50,000. That means my liability is 300K. Don't forget that my asset is 650,000. Then my liability is 300K. Then that simply means that if I minus that liability, that liability is from my asset, I will have my equity. That means my own contribution to my business is 350K. I'll take it again. I have a business, right? And I sell bags. I have a cash. My business has a cash of 200,000 naira. We have a cash of 200,000 naira, probably gotten from sales or a grant or anything. We have a cash of 200,000 naira. And we have stock. We have bags of 300K bags. And I have a machine that I use in making those bags. And that machine cost 150,000 naira when I bought it. That means my asset is 650K. Then to help my business, right, I try to take a loan, whether from bank or from anywhere. I try to take a loan, and the loan is 250K. Then I'm a supplier. Of course, sometimes not every time you deal on cash basis. Sometimes you do credit. Then I have a credit of 50K for my supplier. So 50K plus the 250 bank loan, that's 300K. That means my liability is 300K. So now for this accounting rule, this golden accounting rule, when I minus my liability from my assets, I will have my equity. So basically, my equity there is the liability minus assets. That's 650 minus 300K. So my equity there is 350. So now, if you want to add your equity, 350 plus 300, you still get 650 650 of asset. So it has to balance the liabilities, what you are owing outsiders, and what you have contributed to the business has to be equal to the assets that you have. And the asset that you have is the machines, is the goods available that you have, is the money your business has. That is assets. So your assets, those things has to be equal with what you are owing outsiders and what you have contributed to your business. I was about to say hallelujah. Double entry bookkeeping. So this one is a bit should I say advanced, but I'm going to talk about it. Every transaction that you record, maybe you're using a paper or biro, or you're using an accounting software, it must have two legs. It must have two legs, a debit side and a credit side. So the double entry principle states that every financial transaction affects at least two accounts. One is debited and one is what? Credited. For example, we want to buy fuel for our business. We are going to debit fuel account. That means that fuel account is increasing, like the debit, that expenses is increasing. So we are removing money from that account and we will what? Credit cash. That cash will decrease because we are reducing, taking money from that cash account to go and buy what? To go and buy the fuel. But fuel, we debit it. Cash, we credit it. Everything you are recording must always have two legs. That is just the explanation to this double entry bookkeeping. Every transaction that you are recording must have two legs. Money cannot just fall from somewhere. It's coming from somewhere. It's coming from your bank or it's coming from your cash. So that cash or that bank account will reduce because you're taking the money out to go and buy fuel. And that fuel account will increase. So that's the concept of double entry bookkeeping. Then we're also going to income and expenses. We're going deeper. So what actually counts? Our income and what they mean. So type of income, we have three types of income. Trading income, these are income that comes from your your core business activities. You are selling, you are producing. These are income that comes from your basic activities. Like for myself now, when I sell my bed sheets, pillows, mattress, that is my trading income. Now, rental income. For my sales, and I'm able to invest some money that I realized, I'm able to buy shares, or I'm able to do mutual funds, or I'm able to build something that I'm getting, build something and people are paying rent. Those money is called, those that are called other income. You apply for a grant and by God's grace you won it, that is other income. So other income include rental income, interest you earned from the money you have generated from your business and you saved it somewhere, you invested in somewhere. That interest you earn is other income. Commission you received, maybe you bought something and there's a commission you earned on it, that is other income. Then capital receipts. Capital receipts is basically when you sell one of your business assets. Maybe you have a machine that is old and you sold it, that money, you disposed it. It's called disposal in accounting. That money is called capital receipt. It's not a regular income. Maybe there's something that is old in your store and you sold it. That money is called capital receipt. So three types of income: trading income, other income, and capital receipts. So for expenses, we have also three types of expenses. We have direct cost of sales, that's direct expenses. So these include that expenses you made when you wanted to make that production or render that services, those materials that you bought, those labor that those people that helped in producing that product, right? The goods that you bought to resell. Like for me now, I buy the sheets. I can't see my screen. I don't know if anything is going because I'm putting this on presentation mode. So I don't know what's going on. So if there's any question, you can just unmute and speak. Okay, I'll continue. The type of expenses, the cost of sales, as I said, is direct. The materials that you have bought to produce what you are selling. And if you are not producing to production, maybe you are reselling, the money that you used to buy that product so that you can resell. That is your cost of sales. Now we have operating expenses. Cost of sales is direct. Operating expenses is indirect. It impacts the production of, it impacts the product you are selling, but it's not a direct cost. You cannot see it on the body. Like for example, you can't see rent on the body of a bed sheet. You can't see salaries that I'm paying to staff on the body of a bed sheet. You can't see the adverts the advertising cost that on the body of the bed sheet, but you can see that bed sheet was sewn by somebody. You can see a thread. That thread is a cost of sales, is a direct cost. That the person that sold it, made it that beautiful, that put their skill into making that bed sheet, that is a direct cost. That is the cost of sales. That's the cost of sales. So for indirect cost, you can't see it on the, that's a simple way I can explain. You can't see it on the product. These include rent, utilities like water bill, NEPA bill, data, salaries, marketing. These are the things that keep the business running on a day-to-day. That is what the indirect cost. Capital expenditure. This is capital is called capex. Buying assets, equipment, buying assets such as equipment, vehicle. This is not an expense. It's not an expenses. It is not an expense. It is an investment for the business. It is, and it's called capex. It is not an expenses. It is an investment for the business. So the profit ladder basically is revenue minus, when you revenue minus cost of goods sold equals to your gross profit. That gross profit, you now remove your operating expenses, you get your net profit. That net profit, if it's enough, if your revenue is up to the tax threshold, so when you remove the tax from the net profit, then you now have your profit after tax. So basically, this is what counts for your business, your income and your expenses. This is what counts. So now I'm moving on to cash flow and profit. So many of it's possible for us to like sell and you can't see it in your bank account. I think I said it earlier. You are selling, but you're not seeing it in your bank statement. But your record is showing that sales is going on. So I wrote here that this is the most misunderstood concept in SME finance, cash flow and profits, because there's always sales every month. That month was a very busy month for the business. Like there was sales, everything was going on. But when you call your bank statement, nothing. We need to, on this, one of the reasons a business can still be profitable, but still run out of cash. You're doing a lot, but no cash to do day to day is very possible. And it's one reason why SME fails. So profits now, is basically minusing all your expenses from your revenue. All your expenses from your revenue, that's profits. And you find it in your income statement, that's your profit and loss. And is on accrual basis, includes money not yet received. Whether you profit that's okay, you made a sale this month, but a lot of people actually bought on credit. You have to account for it. That's still your profit. But where is the cash? There's no cash. You have to account for it because this particular financial statement is on accrual basis. And of course, you use it to measure your business performance over a period. Okay, though you have not gotten the money at hand, you use it to measure, okay, this was what we realized this period. And it can be positive, it can be positive even when cash is negative. Even when you don't, because it's accruals, you have not gotten the cash, but you recorded it that there was a profit that was made. So for cash flow, it's actual cash movement in and out of your bank. Actually, people are buying and they are paying. You are also buying things and you are paying. You're taking loan, you are paying back, you are getting grants, you are using it to do just the movement in and out of your bank. That's cash flow. It is shown on the cash flow statement, and of course, it's on a cash basis. Money you actually, what is recorded there is money that you actually received, not the one that there is yet to be paid. Oh yes, you rendered the service, but the customer has not yet paid you. No, that money is not going to be recorded in your cash flow statement. What is recorded there is the one that you have received in your bank and the one that is leaving your bank. Those are the ones that are recorded in a cash flow statement. And That cash flow statement, you can use it to determine, measure your liquidity. Oh, is my business liquid? Yes. If something happens, yes, maybe your driver, I don't know, missed a lane and they have to fine him. Do we have money to pay for that fine? Yes. Are you liquid? You want something now? No. Are you liquid to pay the bills and not look for where to borrow? Are you liquid? This is the cash. This is the statement that shows how liquid you are. Okay, even if you have an asset, is it easily convertible to money? So this is the statement that shows it. And if it is negative, if your cash flow is negative, if the business cash flow is negative, the business can actually close down. So for example, you sent a client invoice 500K in March, and you, of course, your profits and loss will show that 500, the profit was recorded, maybe 250 was the profit, but client pays in May, cash arrives in May. That's in your cash flow for March. It will not carry that 500K. The cash flow is when he paid, that month that he paid, that is the month that will carry the cash flow. But your profit and loss can carry that 500K as profit that you made. So accrual basis, you render the service, but they've not paid for it. It's accumulating until when they eventually pay. Despite the fact that it's accumulating, doesn't mean that you will not record it. You will still record it in that month that profit came in. You still record, but for a cash flow statement, you will not record it in that month because you have not received the profit. So now, this is what a financial statement looks like. This is what it looks like. It's also called profit and loss account, or P&L. It shows the income that you have earned and expenses that you have incurred over a period. It could be monthly, quarterly, or yearly. This is what it looks like. And I said, these are profit that even if they've not paid you, it's going to show here. So this is cost revenue 1.2, for example, 1.2. Then to produce this 1.2, the cost that went into the production of this 1.2 is 480. So when you move 480 from this 1.2, you have 720,000 naira. So now you want to remove your expenses. That's indirect costs, salaries and wages, rent, marketing, transport, and other operational costs. When you remove them, you now have net profit of 355,000 naira. And the tax rate here is 30%. When you do 30% of 355, you have okay, sorry. Oh, what just happened? A moment, please. Okay. All right. Presentation. Okay. All right. So when you remove your tax 106,500, that's the tax from the profit. The amount left is now your profit after tax. This is what an income statement looks like, and one of the things that they require when you want to apply for grant. Not every business owner might have good understanding of this. So this is where you will now need an accountant to come in to help you. So I will get somewhere and I will explain how you can make the life of the accountant very easy, but I'll get there. But this is basically what an income statement or a profit and loss account looks like. It has the revenue. You remove the costs that you incurred to make that revenue. Then that's will then give you the gross profit. Then when you move your expenses, you now have your net profit. When you move your tax, if the revenue is up to the amount, the threshold that a tax needs to be paid on, when you move your tax, you now have profit after tax. If there is no tax, if the revenue is not up to the tax threshold, then there's no need for any tax removal. So the other financial statement again is the balance sheet. This one shows basically what your business owns and what it owes and the owner's equity. So as I said earlier, the asset has to be equal to the liabilities plus the equity. So your asset is basically your machines. If you have a car, your car, if you have stocks, of course, what you are selling is your assets. If people are owing you, people are owing the business, people are owing the business, that is also an asset. And the money you have, whether as cash or whether in the bank, that is also asset. This is usually on the left side of your sheet, on the left side. Okay, it depends. In the current presentation format is not left or right. It's just like a note, like the previous one I showed, like the income statement is just like a note like this, just a roll down of all the items, but here it's showing left and right. So now the current liabilities, the non-current liability on this slide, we have just loan, and that's 250. And when when you are owing people, that's creditors, trade creditors. When you are owing people, when people are owing you, they are your debtors. But when you are owing people, those people that you are owing, they are called creditors. Your creditors, 45,000. Maybe there's a tax that you're yet to pay. That's 30,000 naira. 30,000 naira. When you sum it up, the loan, people you are owing, the tax you are yet to pay, that means your liability is 325,000 naira. So owner's equity is basically capital that the owner has contributed. And if there is any profit you made in the previous year that is coming to the next year, the following year, that's retained profit, then you add it, then you get your total liabilities plus equity. You can see that this total liabilities plus equity, 475,000 naira is the equity, 325,000 naira is the liability. When you add it, you get 800k. Look at the asset side. You can see that all the assets, the equipment, the motor, the inventory, the debtors, and the cash is 800k. It shows that it balances. That means this company is good to go. So this is a snapshot of what a business owns and owes. This is just a snapshot of it. Now we have the cash flow statement, where actual movement of cash from different activities, operating activities, investing activities, financing activities. Like, of course, a business exists to make profit. The activities you are doing to make profit is operating activities. The activities you are doing to ensure that this profit is made, maybe you buy an asset or you sold an asset, that's investing activities. Then financing activities, you are taking loans for the business, you are returning it, that is the financing activity. So cash received from a customer, cash paid to a supplier, cash paid to employer. You can see there's no credit here, but on the income statement, you can see accrual, you can see profit that has been earned, but have not been received, can be recorded there. But here, it's just cash you receive from your customer, cash you paid to your supplier, cash you paid to employees, and other operating payments. Then you have your net cash from operations, the net cash from investing. If you made a purchase of equipment, if you sold an asset, the money that you realized, those are investing activities. And financing activities are loans that you received from bank or that you paid, or maybe you took out money from your business to do something and you put in money into your business. That's financing activities. So now I want to also move on to invoicing, receipts, and record keeping. So this financial statements would be achievable if these things are in order, if your record keeping essentials are intact, like they are 100%, they are top notch. For example, a proper invoice should have a business name, an address, customer name, invoice number, invoice date, payment, description of goods, quantity, VAT, and bank details, right? Even if you don't have an invoice, you should have a record. Okay, when you are recording, okay, you sold this. This is the person that bought it. This is the person's address. This is the person's name. This is what they bought. This is the date that they bought it. This is the date that the payment was made. This is the name of the thing that they bought. How many did they buy it? What is the unit? What is the price per one? Then the total price. Is there VAT? Are you charging the client VAT? Then your bank, Yeah, these are things that you need to record. These are basically things that you need to record. So, but if you have a sales invoice, if you have invoice, that's perfect. You keep your every sale that you have, there should be issued, you should issue out an invoice, and you keep this invoice, keep them sequentially. You help your accountant if you are arranging this thing sequentially. Keep them sequentially. Purchase receipts, keep them too as well. Every receipt that you, whether you buy water, you buy water, fuel, whatever thing that you do, we must keep these receipts. To, even if it's a receipt from a POS, you withdraw cash from POS to buy the water, you withdraw cash from POS to pay the Uber man. We keep those POS, keep those POS receipts, keep those receipts. These are the things that your accountants will come and look at and start, okay, recording and analyzing. Even auditors, we also need it. They rely on those evidences to validate what you say that you have recorded. Or you say that you recorded 850 for Uber delivery. Can I see the receipts? Can I see the evidence of payment? And sometimes our evidence of payment does not even have description. It's not really ideal. You should have proper description of what that money was meant for. Of course, bank statement should be reconciled every month. Like, take time to look line by line. Okay, this money. Sometimes the bank statement comes with some vague interpretation, whether it's a system thing from the bank end, but it should be reconciled every month. Be able to match what is in your bank statement with what is in the record you are keeping, whether it's a paper and biro record you are keeping, whether it's an Excel record you are keeping, whether you have Sage or QuickBooks. It needs to match together. They need to match the bank statement and what is in that record needs to match. Your payroll as well. As a staff, as a business, your payrolls, your staff there needs to be some deductions like payee, NSIATF, and NHF. These deductions need to be done. And when you do the deduction, there's usually an evidence from the government that, okay, yes, we have done this thing. These things need to be kept. These records, they need to be kept. The supplier invoice. If you doc everything that your supplier gives to you, you buy from your supplier, whether it's credit or cash, the invoice that they give to you, they need to match the payments you are making. They need to match. If they're writing 250,000 naira in the invoice, what should be leaving, and there's a date there, what should be leaving that bank that day should be 250,000 naira. Maybe you have a personal stuff with the supplier, and you want to add an extra 100K. So send it separately, because it's going to be confusing when the accountant or the auditor wants to verify all these things. We are seeing 250 in invoice, but in bank statements for that day, I'm seeing 350. It's really confusing. So these are things that are very essential to record keeping. Your sales invoice, your purchase receipt, your bank statement, your payroll records, if you have staff under you, and your supplier invoice. This paperwork is your proof of your business. Then budgeting and financial planning. Many of us don't do this, and I think it's something that we can explore as business people. We can explore it. You can decide that, okay, before this new month starts, before July comes, let me state how much I want to sell. Like for me, I recently did nylon, and I told myself that, okay, this nylon I did is for this. It's not like it's for this year. I did some nylon, and I'm like, okay, I'm expected to sell 100 pieces of this thing, or 1,000 pieces of this thing, because I did 1,000 nylon, or because I did 100 nylon, or because I did 15 nylon. That's budgeting. And if the year ends, or if the month ends, and that nylon is remaining 5, is remaining 20, or that nylon finishes, that you have to produce another nylon, is because, okay, you have to produce another nylon. That means you exceeded your budget. If the nylon is still remaining at the end of the month, right, that means you didn't meet your budget. So budgeting is very important. It is important to plan the business. A budget is a financial plan, a forecast of expected income and expenses for a future. It gives you a target to aim for and a baseline to measure your performance. So at the end of July, you cannot tell yourself that, okay, I did 100 nylon for July. How many nylon is remaining? Oh, okay, 2 nylon. That means we did 98. Okay, not that bad. We can do better. That is the purpose of of budgeting. So you need to set, okay, I want to sales revenue. I want to realize 5 million naira worth of sales in July. And to produce this 5 million, we should not, the expenses should not be more than 2 million. Should not be more than 2 million. Then if you do 5 million minus 2 million, that means your gross profit is 3 million naira. Okay, now we need to be removing, even if you pay your rent at the end of the year, every month you need to be setting aside your money for rent, setting aside it from the business you are making. You need to be paying your, of course, you need to set aside money for staff salary. Staff are paid every month. Marketing, advertising, this can even happen weekly, daily, monthly. You need to set aside money. When you remove all those expenses, you now have your net profit. You now tell yourself, okay, this is what, then at the end of the month, I should have 2.5 million as my net profit. Then the month will now start. You're going. Then at the end of the month or the beginning of the following month, you need to come and, okay, all right, we said I want to do 5 million in revenue. How much did we do? We did this amount. Oh, did we exceed it? Did we not exceed it? That variance can be positive, it can be negative. If it is a positive variance, that means you exceeded your budget for that month. If it's a negative variance, that means the budget for that month was not met. Please, are we following? I just want someone to just unmute and say, yes, I'm following, because I can't see the team's chart.
Yeah, yes, I am.
Okay, thank you very much. All right, I have 4 minutes. This is supposed to end by 12. So yes, so that's the purpose of budgeting. It helps you to plan. And I give an example of the nylon. You can tell yourself that, okay, I have this, because I learned that from a friend. She's into clothing. So she buys nylon. She said that if she buy 50 nylon, she must sell 50 clothes that month. That month she must sell 50 clothes. So if she sells 50 clothes that month, that means she met her budget, like on point, she met it. If she sells less than that, that means she did not meet her budget. If she exceeded 50, that means, of course, that's a positive variance, she exceeded it. So that is the purpose of budgeting. It's just, and it should be reviewed every month. It should be reviewed every month, whether you perform under your budget or you did above your budget. If you perform below your budget, then you need to investigate what happened. Yeah, that's accounting. Yeah, and now interpreting it. What happened? Why did we not meet our budget? What happened? What happened basically? Okay, and even if you even exceed your budget, right? You still need to investigate. What did you do well? What did I do well this month that made my budget, so that you can replicate it in other months? That is the interpretation part of accounting. All right, so tax and compliance. So basically, this, I wouldn't be dwelling too much in tax because it's not my call. So basically, there are different with the new regulation that are given by NRS. There are every business size have their own requirements. They have their own. The threshold have what they're expected to do. What's also expected to be deducted. If you're a medium organization, scale business, you need to deduct payee and remit it to your state IRS. So that is that for tax. So, and I think now with the new regulation, tax, you're only expected to pay tax if your revenue is greater than 100 million naira. Expected to pay tax, expected to pay VAT. That's CIT. WHT, withholding tax, and you're expected to also pay remit VAT as well. And if you are paying staff, you need to do payee. Yeah, you also need to do PENCOM. You also need to register with PENCOM if your revenue is above 100 million. If it's below 100 million, it's not a requirement, but there are some registrations that you need to make. So regulatory obligations, we have CAMA, Company Aligned Matters Act, we have FIRS, Federal Inland Revenue Service, and we have PENCOM, that's for pension, and ITF, that's for training. As a business, we're supposed to train our staff. And when you train your staff, right, you tell the government that this is what you use. You're supposed to use 1% of, I think it's 1% of what you pay your staff. You also use that 1% of the total amount you pay your client, use it in training them, and you remit it to the government. Government will now reimburse you back government will give you back that money back. Yes. So there are some things that we need to comply to as a business person. CAC, your business needs to be registered. Of course, a different type of business registration. There's limited company, there's partnership, there's business name, sole trader. Your business needs to be registered with CAC. Yeah, and you need to file annual returns. Even for a small company, you need to file annual returns, right? And if you are not registered, you cannot have a corporate bank account. So for you to have a corporate bank, and these are things that is required when you want to apply for grants. You need to have a corporate bank account. And of course, to have a corporate bank account, you need to show them that you have this CAC registration. And of course, pension as well. This is when you have staff. You need to do all these remittance to the pension body. And for FIRS, you need to register to get your TIN. You need to file for your company income tax. You need to file for VAT. Of course, as I mentioned earlier, there's a threshold for these filings. If you don't meet up, that's 100 million and above. If you don't meet up 100 million, you cannot make all these filings. And if you do not make them, there are penalties. You need to have an account with tax promos as well to do your filings as well. And NHF and NSITF, okay, NSITF, 1% of your monthly payroll by employer, that's what you pay as NSITF. For NHF, 2.5% of the basic salary should be deducted from staff earnings greater than 3,000 naira per month to remit to the Federal Mortgage Bank. And for ITF, 1% of your annual payroll. So if in a year you pay your staff 1 million every year, 1% of that and you have staff strength of over 25 staff members, they will reimburse you. And if the money is 50 million and above, government will reimburse you back that money. You would give it to them and they'll give it to you back. So you need receipts of all of this. Receipts for all of this during audits, and some grant application might request for this. So we need to prepare ourselves as business people in Nigeria. So now, accounting judgment and practical advice. So the good bookkeeping records the facts, good accounting interprets them. So as I gave differences earlier in this training, that bookkeeping is basically recording the facts, your sales, your expenses, classifying them. That is good bookkeeping. But when it comes to you now interpreting it, making judgment, making decision, that is when that moves to accounting. So these are the gray areas where you will need your judgment and your own personal judgment and an accountant. Revenue recognition. When do you record your sale? Is it at invoice or at delivery or when you receive cash? Cash basis, that means you record it when the money has entered your account. You now record, okay, that you made a sale. Accrual basis is, okay, you have done the service, so you have sold the goods to the customer, but money has not yet entered. So now it depends on you and your accountant in deciding how you recognize your revenue. Asset versus expenses boundary. So anything, you can decide that anything less than 50,000 for this business, so it should be expensed. But anything greater than 50,000 should be capitalized. If it's less than 50,000, so these are things you need to discuss with your accountant. These are conversations you need to have with them. Accruals and prepayments. Accruals basically means that these are costs that you have incurred. You have incurred this cost, but there's no invoice. There's no invoice for it. December electricity bill is paid in January. But when did you incur the cost? When did you use the electricity? Use it in December, but you're going to pay for it in January. Prepayment is basically paying in advance. So you have not enjoyed the benefit, but you have already paid for it. So how to record this thing between you and your accountant? Bad debt provisioning. Not everybody will pay your debts. When you notice that, okay, this is not possible, some people will not pay their debt, you need to be making provisions for the debt. You need to make, as a business, making provisions from the debt. And again, we need to also give our debtors like timeline. Okay, any debt that is older than 90 days, forget about it. Like, not every debtor will pay. Review your debtors older than 90 days. And if it's older than 90 days, not necessarily, I'm not saying forget about it. Basically, make a provision, right, of this debt. Be setting money aside for that debt. When the person eventually pays, yes, fine. Then you reduce the account for that the provision for that bad debt will be reduced when the person finally paid. And okay. So, and when the person finally paid, you write it off from your goods. So that's expenses is no longer a bad debt because the person has finally paid. And of course, when the person paid their debt, you still have to tax is tax deductible. The government will still charge tax on that particular thing. Owner's drawing versus salary. So sole traders, money you take out of your business is not an expenses, it's a drawing. It is called drawing. Money you took out for your business, whether you use it for personal stuff or for anything, it as long as you took it out for yourself, is not an expense, it's a drawing. It does not reduce your taxable profits. So for limited companies, pay salary or dividend, mixing them is error. Salary, dividend, mixing them is error. You need to classify them very well because FRS can come and say, like, okay, let me look at your books, let me look at what you have been doing. And they will not say, okay, this thing that you have removed is not part of it. You need to add it back. You need to add it back and they will charge what they need to charge. Withholding tax, like for example, if you have dividend, say it's not from the regular business activities, like I got this dividend, is the stock I bought from Access Bank that gave me this dividend, and you remove it. Withholding tax needs to be charged. Government is going to charge withholding tax from it. So tax planning and evasion, these are things you need to plan with your accountant. Basically, okay, how can we avoiding to pay your tax is wrong, but there's a way accountants, tax people can arrange your books and you probably pay less amount or you don't even pay at all. So these things are done by a professional. Now, so practical tips for your business. So just to start right and to stay consistent, have a dedicated account for your business, not using your personal account. Okay, today you can also, there's network issue, this corporate account is not good. Okay, I'll send it to my personal account. You might not remember to send it back to your corporate account. So have a separate account for your business. Keep all receipts, whether it's online receipt or it's physical copy receipt. WhatsApp it to yourself, snap it, keep it. Have an inbox somewhere where you're keeping all the receipts. If possible, you can keep it, have a folder day by day. All the receipts you got this month or this day or this week. Just make that arrangement, because it will help your accountant or help the auditor that is coming to help your business. Know your break even. Know how much you need to sell or you need to produce that will cover the costs of your business and that you even still make profit. Know it. Know your break even. Break even is equals to fixed cost divided by gross margin percent. Know how much you must sell to cover your cost. Like even if you don't make profit, but you are still a going concern. Like even if you don't make, that's break even. Know how much you need to sell as a business to cover your costs. At least to keep going as a business, not to close down. Know how much you need to sell. Record same day. Every day you make a transaction. I know we can be tired. We can be tired, or let's ensure we record same day. And if the business is so big and you have an accountant, it's good to be checking every week. Put the person on their toes. Check the person every week, every day. Okay, let me see what we have done today. Let me see what we did this week. Let me see what we did in this last 2 weeks, in this month. Follow the person back to back. Ensure that record is being done every day. Reconcile monthly your bank statement and your receipts, your bank statements and your records. Make sure everything balances. Invoice monthly. Send invoice on time to customers and receive invoice as well from your suppliers. Chase your debtors. You can have a policy. 30 days. If you do more than 30 days, you don't deal with such a person again. That's your policy. And you follow up on overdue invoices. Set a payment policy for all your debtors and review weekly. At least spend 30 minutes, maybe every Friday, review your week numbers. Okay, what did I do? And just it's our business. So we need to be like, do it right and be consistent in it. So review weekly. So okay, so now some tools that you can use as a business owner. So if you're just starting your business, you can start with a pen or a biro, pen and paper, and you just get a book and you name it as Cash Book for Naya Even Beddings. And that is what you are going to be using to record your transactions. If you are a bit tech savvy or a computer literate, you can use Excel, can use Google Sheets. Then you create sheets. Okay, this one is for my profit and loss. This one is for my cash book. This one is for my budget. You can do that. Then there are also invoicing apps that you can use as well. There are also business apps that you can download on your Play Store or App Store to also do this recording. And if you are a growing businesses, you can do QuickBooks, though it's in dollars and our business is in naira. So but QuickBooks is a solution. You can use Sage, you can use Zoho Books as well. I think Zoho has a free version. You can use it. So if you're now a full like a big business and you're scaling, of course, QuickBooks Online, the whole of the QuickBooks product, you can use Zero, though that is for international business, and Tally ERP, very popular in Nigeria. So whatever it is you can start today, the best way is the one that you actually use consistently. So because everybody's using QuickBooks, you now want to now use QuickBooks, but you are not being consistent. If it's biro and paper that will help you to be consistent, biro and paper to record it, to write it, or snapping on the receipt and sending it to yourself on WhatsApp, or having a folder where you're keeping your receipts, or a document, or a file, a physical file, where, okay, not something that water will not tamper, of course. They are keeping all these things. Just be consistent. Consistency is what matters. It's good to start simple, and as you grow, you begin to scale. So so that's it for this training. Is there any question? Is there any clarification you want me to make? Thank you very much for your audience.
Wow. Thank you so much. Thank you so much, Grace. God bless you. Thank you for sharing. In fact, I also, I also learned from it. Thank you very much. So I want
Thank you for the opportunity.
put this here. The certifications that she mentioned, or let me say the stuff that means get those NSIF, if you are going for grants and you submit all those certification, it will help you. It shows that just as good as you having NAFDAC and SON, it shows sustainability for your business, that you are really, really grounded. It's not like you want to do business now, then later you jackpot and then you close down the business. Sure, you get that's number one. Number two, if you, like she said, if you are computer savvy and you feel you can punch in the figures by yourself, punch in the big stuff by yourself without having to hire an accountant, then you can of course do it by yourself. All those, even myself, I have an invoice app that I use. However, I also have an accountant. So I only do whatever I need to do on my invoice. My accountant does all the reconciliation, do everything, just in case our numbers or our books are being requested for. All right. I know it can be tasky. I know it can be a lot. That is why I said, you know what, let me just allow Grace to, speak. Now, I must say this: either you are going for grants or you're not going for grants. For your business to have sustainability, you have to have proper record keeping, proper inventory. Even if you are spending your business money, like, today I work, I want to carry my money and go and eat a kwabi, right? Is that you yourself, you spend the money. I mean, you should know that, you should know where the money is going to. I know I can be, but I'm not encouraging you to spend your business money. I'm only saying, if you did put it. Some of us, our businesses are not yet paying us salary, but we are paying our staff. It's fine. Let it be on the record that you are not yet collecting salary. I think somebody asked the question if you can hire a contract accountant. Yes, but can we have a contract accountant? Yes, now person can just come once in 3 months and do your books. Even my own accountant is fully remote. I think I have an invoice. So if she has the invoice, I'll just send the invoice templates to her. Or I think she has access to the invoice as well, so she can reconcile from that invoice without having to come physically to our store. So it's not anything. That one is not supposed to be an issue. All right. I use Zoho, but not consistent. It's sort of complicated. I beg, I want serious like this. Is there a template or something? So Um, I don't know. I don't use Zoho, so I really can't tell for that. Google Sheet is so easy. You can prompt ChatGPT on a template. Sola is giving you another advice. I was originally using Excel, but I delay always in recording my sales, so I moved to Google Sheet. So for me, I don't even use Google Sheet. I use an invoice. So one thing why invoice is better is because all your products are already on that invoice. So let me use, for instance, I sell mattresses. So orthopedic mattress 6 by 6 by 10, the price is already there. If I want to do like right now in my business, we are doing 50% sales. I'll just apply the 15% to the discount. The thing will automatically by itself generate the 15%. You understand? And if I'm increasing price of my mattress because maybe there's increased price in transportation, increase from the cost of material, cost of the mattress from the factory, I'll go and increase the original price. Do you understand? So all your products are already on your invoice. You just pick, and then the thing will generate it by itself. If you are doing discount, if you are doing tax, everything's on your invoice. Another way that I've also learned how to do this invoicing thing without an issue is using Bumper or a website. Some of us, you can integrate all of these things into your website. So, but Bumper is like a 100% online shop. All right. If you have Bumper, you don't need a website again. You don't go and pay for website again. So but I think you pay yearly on Bumper depending on the subscription that you get. So when you now get on Bumper, from beginning to the end, Bumper will do everything. The only thing that it might not do for you is the expenses, but generate invoice, generate everything to the customer, to the logistics, to the everything. Bumper will do it for you. And at the back end, you can download everything, send it to your accountant to now do all the reconciliation. I mean, that in fact, even me that have website, I'm tending to move towards the Bumper because of all of this stuff. John says, if you can get a contract accountant, do we have some few persons that can be recommended? Can we? Okay, I will try to speak to one or two persons and see if they can work basically on contract. And I'll let you guys know in TDI community group. The next one is, can we have access to this slide? Okay, I will ask Grace and see if I can drop the slide. But this particular what's it called? This particular meeting is being recorded. The link will be shared with us later so we can go back and watch it. Thank you, Kadri. Which app do you use that Temidayo for? Okay, I use Simple Invoice. Simple Invoice. That one too, you pay yearly. I think maybe 5,000 plus, but I pay yearly. And in fact, in my business, I don't use anything paper. I don't print anything paper, except the customer now says, I want paper, because some companies buy mattresses. And so just to bridge the gap of maybe their staff is cheating, or maybe I tell them that the company price, the mattress is 100,000, their price, staff wanted that is 150. So they want me to generate on the main invoice, and that's when I'll now go and take the pain of printing. Else, or in fact, I tell them, most of the time I tell them that I don't print. It's strictly soft copy. I will send it to your email, send it as a PDF to your WhatsApp, or even if it's a screenshot or whatever you need. But because you have to, as a business owner, you have to find every means by which to reduce costs. All right. I ordered for something from somebody. They are fully online store. Then when I was done ordering on their website, and I realized that they asked me for one extra 1,000 plus. I was wondering what's this money for, because what I have bought, even if you are charging me for VAT, there's something I just felt was not accurate or correct. When I actually got my item, I saw the reason why they charged me 1,000 naira. The bag they use in packaging it, they charged for it. The paper that they use in printing, they charged for it. It's not supposed to be. As a matter of fact, I feel they even charged for the email messaging. That aside the fact that I paid for delivery again. Do you understand? That is why for me, I prefer 100% soft. It's not, nobody is, I won't have the buying ink, the printing paper, all those small wala. As a business owner, you really want to cut down on expenses. All right, so the next one is, Madam Temidayo, please, what's the name of the invoice app you use? I use Simple Invoice. I'll try to drop the logo of that Simple Invoice in the community so you guys can use. But Simple Invoice, that's just the name. But there's so many Simple Invoices on App Store. Yeah, but I will try to get the one. I will try to drop the logo. 3, also for further discussion and inquiries around proper business accounting, is it okay to get Miss Grace? And then so let me put this out there. When it comes to any formal organization, and Just like this one, we said, oh, Grace is Grace. Maybe her name is Beggar, for instance. Grace, whatever is her name, and she's doing going to be teaching you. I don't know if Grace is married, Grace is not married. I mean, that's something personal. After having a personal conversation with her, that's when you can now say, oh, you're Mrs., oh, you're Madam, oh, maybe can you call her baby's name? I have some people that I call them by their baby's name. Mommy, this one, mommy, that one. Do you understand? So please, her name is Grace, just Grace. Can we get Grace contact? I think Grace is also a TDI member. Yeah, Grace is also a TDI member. So I'll probably just link out. But right now, I'm not sure Grace is taking personal stuff. But I have a conversation with her and I will let you guys know. The next one is, yes, makes it so easy. I use Bumper. It helps me analyze my numbers weekly, monthly. It also helps you compare your numbers. Yeah, I can see. I use Simple Invoice to a so it's all okay, very okay. But let's take for instance that Bumper now that does your number analysis and all of that. Bumper will not audit your account. So let's assume that you're trying to pitch to an investor and they say, go and bring your audited account. It's an auditor that will do that for you. All right. You have to pay an auditor to do. But if you have an accountant as also an auditor, fantastic. Or you're trying to evade tax or you're trying to pay tax or whatever, you need somebody that is in that field, like an accountant or a tax person, so that Bumper will not pay tax for you. I hope you guys get what I'm trying to say. That is why an accountant is still needed. Maybe you can put that person on contract. The same way you can put a lawyer on contract basis. Like, we will not have any issue of case, but you need one handy just in case. So last year, somebody went to report me the Lagos State government I forgot the name of that organization, and the person said I sold a bad mattress to her. So when she got the mattress, she has been feeling sick since that time that she got the mattress. She and her mom, she got an orthopedic mattress. So they've been feeling sick on the mattress and she has reached out to me. So when she reached out to me, I was surprised. She got 2 mattresses for me, but one of them is orthopedic. The other one is not orthopedic. The other one doesn't have issue. Orthopedic is the one that has issue with you. I say you're feeling sick. I say, okay, if the thing is too hard for you, get a topper. Then no, she doesn't want to get a topper. She wants me to change the mattress. Yeah, I've been using the mattress for more than 6 months. I said, okay, I'll contact the company. Let's see how we can exchange for you. The company has not even reached that back to me. The next thing she went to report me. I said, okay, there's no problem. I just called my lawyer immediately. But that one, at that time, it was not around. I said, you know what? Don't even worry. I'll go there by myself. So when we got there, I met her. I greeted her. Very polite. I was not angry. I was not anything. Because I really needed to see the end of this thing, So when I got there, she now started with, she started explaining. They told her to explain first. She explained. They made her. And I said, please let me ask her. A particular mattress is causing you pain, making you fall sick, and you are still using it. Yeah, you're not supposed to remove it and find another way to be sleeping, Abby. But no, you are still using that same mattress. And I said, okay, I'll collect this mattress from you now. So those people now said that she now said she does not even want another mattress again. She wants me to pay her back her money. I said, okay, there's no problem. The 6 months that you have used, pay me back too. This woman, she had twins when she was buying this mattress for me. She said, she was, how when somebody wants to buy something for you, see my baby. She was not showing me those baby in the video. I was like, Ibeji. I gave her baby stuff. She didn't buy them. Normally when you buy orthopedic from me, I'll give you a duvet set and I'll give you 2 pillows. Now, in her own case, aside those 2 pillows and the baby set, I gave her towels for the babies. I gave her baby set, baby breastfeeding pillow, baby duvet. I packed everything I gave her. You're seeing human beings. If she went to report me in a normal time, it's good. These people called me the first week in January. Come and be facing panel. You can see how people can be. So I told them that okay, there's no problem. All the stuff that I gave you, maybe you will try to return it back to me. Then I also want to collect my delivery fee for delivering to you. I'll also collect all the money that that's my trust now. You have already used it, so that means you have to pay me for but because I don't know why. So, but something is paid. Just like me, I bought shoe now. I bought shoe from the market. I bought the shoe. The shoe is giving me blisters. Will I still wear the shoe again? The answer is no. Now you bought 2 mattresses. You could have been using the second one that was not giving you problem. Apparently, when she was not talking, she now said, she saw the same mattress somewhere else, but the price difference is just 50K. Oh no, that's 35,000. Meanwhile, those ones will not even give her free delivery. I was just like, those people now start begging me that I should please give her the money. I said, there's no problem. I'll refund her, but in 3 months' time, I will pay her 3 times. Maybe you will say you have sense. The CEO of that place, because another place is a state government, it's Lagos State Government Ministry. I think the director now called me to his office, now begged me that seeing people have problem. That is very obvious that this woman wants a problem with me. That I should just please, as she begged me, that she please, if I can pay the money twice and let her just go in peace. Because everybody was wondering, you are still using the mattress and you're saying it's paying, because so in cases like this, you need a legal person. I'm sure that if I went with my lawyer, hey, Baba Dudu is a crazy person. He will not even hear story. He will not hear story. And there are times that I need to write some, like for me now, I do trainings for people that want to win grants. Okay, and sometimes I share my intellectual property, my intellectual property with those people, and I need them to hold it in their hand and not share it. So you're going to sign. I have a document by my lawyer. You will sign that document. So if I see that document in another place, I'll pick you up. And guess what? I need money. You will pay me. I see this my lawyer. He too, he likes money, so he's always looking for problems. That is why you also need, as much as you need an accountant handy, you need a lawyer handy as well. So people can be crazy. Don't let me lie to you. And that is why, going back to the invoice, on my own invoice, I have sales policy there. You will see that our mattresses is if you pay on Monday, we are delivering between that Monday and the next 7 days. If there's any other issue, we'll take it up with you. We'll let you know. Because people can be very fun. I've seen all manner of things in business. As much as I want to do business, my sales policies are customer friendly. But the moment you pay me, it says that we are both in agreement. I didn't learn all these things off. So I learned it from, of course, I've gone for different business trainings and I had to come up with something. All right. So please, you need all of these things. But I just want to tell you the reasons why you need that invoice. Even those that are using bumper, let your terms and conditions be boldly written. Let people see it. So that they will buy wig from you today. They'll go and use that after 2 weeks. They say, the wig is removing sponge. I know of somebody that bought bedsheet for me. After maybe like a month, she now returned and said the bedsheet tore. I don't understand. You're using the bedsheet tore. The bedsheet now tore. How? Eventually, by the time I looked at it, I said, man, it's nail of your bed that tore this thing. There was even somebody that bought all my 6x6 comes with 4 pillowcases. She argued that I sent her 2 pillowcases. I said, ma, it's not possible. And me, it's not possible, say. Eventually, she now said that her children that carry 2 pillowcases, the extra 2 pillowcases to their own room. She now called me, she was begging me. You can see where you need legal, what's it called? How legal people need to, when you need that, you need those things to, how do I put it, to make you be on a safe side, because customers will whine you. Customers will do the most. I'm telling you. In fact, God will help us. God will seriously help us. Just so that we don't have any problem. I have somebody to win a grant. She's not on the call. Win a grant recently, and I told her before I start doing any consultation with you, this is my fee. If you win the grant, this is my fee. So either you win the grant or you don't win the grant, that consultation fee is out of it. Because I know I will there, and even till middle of the night, I was working with her because she came very late, like few days to the grant something, and she won the grant. She won that grant. I told her, because I also do some research by myself as regards that particular one. So the first money you are paying me is not refundable, because all the things I'm going to give, the knowledge, everything I'm going to acquire, you cannot give me back. So when you not even win this money, I will take 10%. You don't have to. It's not compulsory. Before we continue, that is my own stuff. If you cannot do, don't bother. Please, you guys get it. And she won last year. To somebody, not even last year. Yeah, it was last year. Somebody to do it. I said, ma, before you start, this is my fee. If you win, this is this one. So all these things are supposed to. Not that person will not collect the money later. That's it. Let me know you collect all my money. That was not concern me. In fact, how you will put that? Because for grants now, you're supposed to utilize that funds for what you say you're going to use that money for. So let's assume that you won 5 million. My own 10% share is 500,000 naira. And so the question is, how do you now reconcile 500,000 naira in that amount if you're supposed to, be accountable to the people that gave you that money, so, or that gave you the money? How you want to reconcile your book does not concern me. Honestly, that is why an accountant comes in, just like how Grace was telling you about tax evasion, tax reconciliation, and all of that. I just hope that this training has helped you, that has helped myself, because I learned 1 or 2 things from it. And why I like Grace is because she has worked with SMEs as well. And she has also worked with me when it has to do with grant stuff. Sometimes we sit down, we talk about the numbers. Then so because if I know that a particular judge will ask me for numbers, I want to know my numbers often way before I even go for the pitching. All right. Okay, so that's it for this particular training. Hopefully, we are coming up with another one next month by the special grace of God. But I hope that with what we have learned today, we'll go and utilize this in our businesses, upgrade ourselves, and all of that. Thank you so much, everybody, for joining this particular training. God bless you. God increase you. I love you guys. Thank you so much. So when this particular recording is ready, I'll definitely put it in the group. Then we can learn. I'll also reach out to Grace if you can share a slide with us so that I can post for you guys. Thank you so much, everybody. I love you guys. Thank you, TDI members. God bless you all. Bye.
Thank you.
Thank you
Bye.
so much, ma.
Okay.
Thank you. Thank you.
Thank you, too. Thank
Thank
you,
you,
too.
Temidayo.
Thank you,
Thank
too.
you so much.
Thank you, ma. Thank you, ma. Thank you, ma.
Thank you, ma.
You are welcome. You are welcome. Thank you, too. Bye. Have a great day ahead.
Auntie Temidayo, I'll call you. This is Auntie Bimbo.
I know. All right, ma.